Traders, welcome back to our price action trading lesson. We're going to use price action rules to help us identify directional bias of the market and where are the high probability setups to enter. So what is the directional bias right now in this market of S&P 500 M&A futures? Well, the bias is very neutral. As you can see, we're going sideways. You have a bullish trend up, bearish trend down, followed by bullish trend up, small break and push to new extreme. So this is a consolidation. There is no trending structure right now. So I have to draw the support. I have to draw the resistance because according to trading range rules in price action, you expect buyers to buy at the bottom, sellers to sell at the top, and most breakouts to fail. So I'm not really thinking about going long now because uptrend played out, and you are right around the top of the trend range. But at the same time, I can't really sell because there is no confirmed downtrend just yet, and we are above EMA. So let's see what's going to happen. We had news announcement, and now finally I'm getting the information that the market is bearish. Okay, because we broke the midline, we're coming off the range highs, so it makes sense right now based on price action for me to expect we are bearish. There's no reason for me to think bullish, and I am thinking about some pullback to the EMA, and I actually have a second entry short. So this right here is a second entry short. This is the lowest low, first entry short, pullback, second entry short. But this second entry short formed just minutes after this volatile spike. This was created by the news, and also I can draw a short-term trend that is still in play. So I don't think we can take second entry short just yet, especially since it happened quickly after news and we have short-term trend. I would like a lower high confirmation setup though, because this spike down probably is going to get some follow through, probably heading all the way down to the bottom, and there was no lower high. We have a break and we have push to a new extreme. Okay, you can think about potential wider downtrend, but as you can see, such a massive spike above EMA, you have to delete the downtrend, follow break a new extreme, because in trend ranges, as you can see, we bounce at the very bottom. You expect buyers to start buying at the bottom. I have a new low, first entry short, so this is high low only. It didn't trigger, there is an inside bar, so you can't really take it. So you have a high low, first entry long, so I'm looking for second entry long. Now this is an inside bar, and the way you count this, you pretty much still count it as normal bar. You're looking for breaks above bars high. Okay, so you have a new high here, no break above here, no break above here, and you have first entry long, but there's a break above this inside bar. So this is a regular bar, first entry long. So can I get a second entry long? Why? Well, because since downtrend played out and we bounce off the range bottom, there's a brand new trend established. The push above EMA is telling you, okay, there's a brand new trend established, and you expect new high. So second entry long at the EMA would be nice. There was only first entry long, break a new high. Market is going higher again, and now you have second entry long. You have a new high right here, first entry long, second entry long. Now this is a little bit nuanced trade, because when you're watching this, you have uptrend that has a break a new high, but there is a possibility to draw a slightly wider channel that also fits pretty well. You can see how nicely it fits, doesn't look that distorted. Now the reason why the second entry long is considered good, it's because those two legs are super broad. Okay, the broader these two legs are separate from one another, the more it is negating any channel, wider channel like this. You can tell this channel is incorrect, it's too broad. So this is giving you confidence that there's not going to be a bearish reversal, that we're most likely going to go higher, but it is a little bit more gut feeling based trade. I didn't take it, I was deciding, but I just didn't decide on time. I kept my channel tight with the break a new high. But there's definitely a reason to go long here, because those two legs are so broad, EMA keeps projecting. You definitely feel like it's going to go higher. So this is more advanced trade. If you skip, no problem. But if you took it, you definitely didn't break the rules. You are having a gut feeling pretty developed. Market is working higher. Okay, and now we're breaking lower. So I'm going to just adapt. There was a break. Push to a new high. I'm going to redraw down, trend working lower, something like this. Okay. There is a new high here, first entry long, second entry long failure, but the signal bar is doji, quite neutral. New low, first entry short. You expect new low for this mini downtrend. You're basically just following these short-term channels, and you're looking for new extremes while in this trend range. And you have pretty much break, new extreme for the downtrend. And we're going quite sideways, and there was some small support being established while we're attempting to get a break in new low. This is only first entry long, but you can view it as some form of a multiple test. You're getting some reaction here, reaction here, reaction here. So this is not a horrible trade. Once again, not super textbook easy trade to take because this support is just about to be established, but downtrend played out. There's some support, great momentum, more advanced trade once again. Can consider. High low is unfortunately a little bit too big, and you can't get a failed second entry short at the EMA. Okay. It's gonna follow the short-term trend, break a new high again. We're at the top of the range, so I'm not gonna think about buying right into the highs. In fact, I'm thinking about potential reversal. Double tap, so I want to see failed second entry long below EMA. Can I get it? New high here, first entry long. Gonna redraw the downtrend. Second entry long failure, but the signal bar once again, terrible bar. This right here is a failed second entry long. As you can see, once the uptrend plays out and you're coming off the range highs, we're not looking for second entry longs to work. We're looking for second entry longs to fail because we're below EMA and off the range highs while the downtrend is in play. We're probably going to go lower, but the signal bar was super weak. I can't really take it. We have some small overshoot. We actually have a second entry short. Now, when I was watching this live, my signal bar looked worse. After reloading my data now, this signal bar is actually much better. When I was watching this live, I had signal bar with a bullish body, so I skipped the second entry short. Also, there's some small overshoot that is also not as pronounced now. If you took it, not a terrible setup after reloading the data. If you had slightly different bar, when you're watching this live, it's very likely that you had bullish body, so you have to skip. But with this signal bar, it's probably more tempting. So if you took a trade here, not that big of a deal. It's okay trade. Depends what signal bar you had. Break, new extreme. Downtrend played out. Okay, I was expecting prices to go higher, but we instantly right now pushed back below. And market right now doesn't have clear direction. Okay, I can see on a larger frame this is one leg down. Break, second leg down. Gonna redraw the downtrend. Break a new extreme. Okay, nothing really much established. We are kind of in no man's land, no good channel. I cannot draw a channel that is wide like this because it seems a little bit too broad to draw such a big channel across the entire range. In these trend ranges, we prefer to drawing these channels tighter, as you can see, because market tends to pivot really quickly in a range like this. Channels tend to be weak and short-lived in a range like this. So let's just focus on the visual two-legged pullback aspect. Okay, horrible second entry short. No signal bar. And now you have a new low first entry short, second entry short failure, followed by a high low confirmation. We're back above the EMA. A lot of sellers probably got trapped selling on the wrong side of EMA under such a nice signal bar after two legs down while everything played out. High low confirmation setup, decent entry to consider. Market is working hard, so I'm forced to draw brand new uptrend. Something like this. And I want to see second entry long at the EMA. I like to see second entry long at the EMA because I simply follow the short-term trend line rule. I have a tiny break in new high, but the break is so tiny. If I'm going to make it a little bit wider, I can still keep the trend intact. Yes, I still get a lot of confirmations. Okay, so this is good. I'm going to make it a little bit wider simply because it still looks like a one trend working higher. The break was very tiny, so now I have the real break and I have to redraw the short-term downtrend. I'm thinking about second entry long at the EMA, which would also be some multiple test because I expect new high for this trend. I expect new high for the uptrend following the trend line rule. We are correcting to the key entry point, which is what we like to see. I'm going to reset the count at new high, first entry long, so can I get a second entry long at the exponential moving average? No, only first entry long and a breaking new high already. Breaking new high already, so no way for me to go long here. Now, I'm not going to widen the channel anymore because we're already bouncing off the range highs. So we made our push to this resistance, and because this is the main key level of this trend range, it's better to expect right now the sellers stepping in rather than some uptrend continuation. So because we're in a trend range, I'm better off expecting this trend having a break in extreme. Okay, market is trending lower. We are slowly but surely creating lower highs and low lows. So after breaking new low, we keep working lower it looks like there is some wider downtrend like this, but this is not fully confirmed just yet. We're still, as you can see, going quite sideways, EMA flat. We still haven't left this consolidation area, so I don't think I can sell here just yet. You know, double bar entry, only lower high, first entry short. It's actually a first entry short only. Not great enough, but this spike down is good. This is giving us confidence that this channel now is valid, and I can right now focus on playing this wider downtrend because this is a significant push face down. I'm going to redraw the correction. I have a new low, first entry short. So what you're thinking about is a second entry short at the key entry point, because we're coming off the range highs, uptrend played out, we're below EMA, and we have series of lower highs and low lows, and the trend is confirmed. So it makes sense for me to expect right now bearish trend to go lower, this trend to be in play. So I want to see second entry short at the EMA, and I have it. New low, first entry short, pull back, second entry short, great signal bar, two key entry points, EMA and the trend line, and this is great high probability setup. I took this setup today for 10 ticks. Second entry short. This is where everything aligns. You have high probability setup. You have clear two-legged pullback, one leg up break, second leg up. You're at key entry points. Context is clear. This is exactly where the probability of this setup working is very, very high. This is exactly what constitutes a high probability trade. So you have to enter here. You can't overthink it. Great setup. You have a new low, so this is only first entry short. You can't treat this as a lower high. You can make it a little bit wider without break and new low. You can still see it's still in play. So we do expect new low, but you know, the second entry short now is above EMA, and you have to use double bar entry. Now there is some resistance which is very convincing, very nice. One top, double top, triple top. Problem is the double bar entry is more aggressive, and you don't really want to sell below this bullish bar above EMA. You know, more advanced trader can consider, but you really prefer some lower high to make sure that this correction is over. Can I get a lower high? No lower high, because lower high would need to create first entry long, and there's no break above these bars high. So market just continues to go lower, break, push to new extreme, and now the market is about to close pretty much. So this is the overall structure for today. Trend structure, support and resistance. You pretty much have to follow the short-term trend lines. Not that many great opportunities. You pretty much always are looking for second entry and expecting new extreme for the current trend line. This was a great shop to finish the day with. If you're patient and you can sit here the entire day, you can get a nice textbook high probability setup. But other than that, we had few more advanced ones, a little bit more aggressive ones, but I don't see that many traps, which is good. It is always better not to have a trade than have a trading day where there are a bunch of traps. The only setup here is the second entry short here, but once again, when you're watching this live, you had probably a different bar and you wouldn't have gotten trapped here, so you can stay away from this trade. So yeah, trend structure, you can see how market keeps pivoting off the support and resistance. You don't have to be worried too much about these insignificant key levels all over the place. You pretty much always want to plot the main high of the day and low of the day key level, and the goal is to have a lot of confirmations and have as little failed breakouts as you can. You don't want to have your key level somewhere here, but you have so many failed breakouts. You always want to find the perfect medium between having a lot of confirmations and having few failed breakouts, so your key level is a valid one. But I hope you're good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.